Anglo American is a 375 billion rand global miner. It's got a primary listing in London and is a member of the FTSE 100 index. Its major assets are Amplats, Kumba Iron Ore, AngloSur Copper, DeBeers, AngloCoal, and a suite of iron ore assets in Brazil. The group recently agreed to sell a local steel maker, Scaw South Africa. Anglo American has a price-to-earnings ratio of 7. Anthony, I'm sure everyone's been watching this Anglo share price. It keeps getting lower. It's been pummeled as of late by the markets. But let's focus on the fundamentals. On the iron ore side, how's the iron ore business of Anglo American's been doing?
Well, the iron ore business is Kumba, but the real issue to talk about is that Anglo, as you said, is exceptionally cheap. It's trading on 1.1 times price to book. Normally trades at 1.9 times. That's a 42% discount to what it normally trades at. It's trading at a forward P of 7.5. Its historic PE through the cycle is about 14 times. So Anglo is exceptionally cheap. And if you can short out Kumba, like we can as a hedge fund, you can buy the rump at a very attractive valuation.
Okay, so let's talk about some of the issues that could potentially impact the business going forward. They've got that ongoing legal dispute with Cogito over their stake, that 24.5% stake. No one knows how this is going to pan out. It could take many years in the courts. Is this something that's a big overhang and a big risk to Anglo?
Look, it's one of the negatives. I'm not sure how enormous it is. But it's interesting because we're taking the reverse opinions here, which is fabulous for the purposes of the show. I'm worried about Anglo American because I think it's cheap, but it's cheap for a reason. People are anxious about Amplats, which continues to underperform. And there has been a pronounced drop in the number of miles traveled in America. So America is kind of falling out of love with its relationship with the car. Not that Chinese are not keen. The scale of those Brazilian iron ore assets is significant. There's a lot of money that's been sunk into purchasing them at the peak of the market, and now even more money has been sunk into developing them. The process there is mines, a 500-odd kilometer pipeline where the stuff is put into a slurry. They've built a port. There's some execution risk issues there, and the scale of that is about equivalent to Kumba, so they're iron ore related anxieties. DeBeers, they're taking up their stake by buying out the Oppenheimer family. I'm not a big fan of the diamond business at all, given the pipeline-related, cyclicality of it. So there are just a lot of issues for me that kind of stack up. And for me, anyway, Anglo is not attractive, and there are many other globally diversified miners that I'd rather own before getting to Anglo.
It has stated that it's looking to potentially sell Amplats. So what do you think the history, we know that the history, in the recent history, is not good for Amplats, but what do you think the future is going to look like for Amplats? Is Anglo American going to ultimately sell this business?
I think they've said that they are doing an operational review. I think that the fundamentals for platinum in the longer term are really good. There is very limited supply, and there is great industrial use for platinum, specifically catalytic converters, but also in the cracking process in oil refining, and obviously jewelry. So if you're looking for a kind of a broad industrial type metal that has long-term potential, and I think Anglo invest for the long term, they're not fly-by-night investors. I think that they will stay with Amplats. I think that the operational issues are difficult but are solvable, and I think that that the valuations through the surplus in Amplats are compelling.
Okay, so hot or not, 278 rand, just above that is what it closed at today.
Yeah, I don't think you're going to get too many chances in life to buy Anglos this cheaply. If you can strip out the underlyings, Kumba and Amplats, like we can, again, you can buy the rest of the business on 5.5 times earnings. That's just for nothing. So, if you're a deep long-term value investor, this is very attractive at this level.
Too many risks, or just too attractive not to buy?
It's not a very attractive rump, in my opinion, so I'd give it a pass.